50 years ago when MasterCard was starting its present activity, well, present activity is quite different because you have so many other options, but 50 years ago, we didn't know the name fintech, although the MasterCard was kind of a fintech.
Yeah, in a sense it was. Obviously, that's a term that's only been around for a couple of years. But in a sense that we've always been involved with the financial community. Our customers are banks and merchants. So we've always been deeply involved in finance, but we've never done the things that banks do. We never lend money, we don't hold deposits. And our business has always relied on technology in order to deliver a service to consumers and to merchants. So in some sense, we were one of the earliest fintechs. We didn't know it at the time. But I think what we've seen also, though, is the fundamental power of technology to enable consumer-facing financial services. We take it for granted, but 50 years ago there was almost no computerization. Now everything's computerized. Now obviously we're building on the vast success we've had. We have 2.3 billion cards on our network, 40 million merchants. We're building on that success and we're taking it digital. So the next growth spurt is really going to be all about migrating those accounts onto the digital devices, the phones, the native digital experiences that consumers are used to in so many aspects of their lives. We need to bring that to payments to really drive the growth of our business in the future.
Three things that almost all fintechs sitting on that chair were telling us that were the basement of their activity was saving time, making things easier, and technology. Yeah. Those same three things apply to MasterCard now.
Yeah, so in digital it's absolutely critical, and I tell my team all the time, the most valuable thing you can do is save somebody time. So people sometimes think that saving them money is more important. I'm a fundamental believer that if you give somebody time back, in return they'll give you loyalty, because that's the truly irreplaceable thing. You can never get it back again, right? And so we see time and time again, space after space, if you can make life easier for consumers, they're going to reward you with their business. How do you think we got to 2.3 billion cards in circulation? We did that by saving people time because they didn't have to go to the ATM and making life better for them. And we've had to relearn to some extent that lesson in digital, which is we need to make sure that everything we do saves the consumer time and makes their life better. So one of our fundamental strategies with MasterPass, which is our digital wallet program, is that we distribute it through our banks. And the reason is because we think it's going to make it easier for consumers to adopt it, because they already have a relationship with their bank and they already have digital credentials, username and password. They're able to accept one-time passwords. So a lot of the infrastructure and a lot of the understanding of the consumer is already in place, and now we're just applying it to digital payments. But every time the consumer uses it, we have to deliver a great consumer experience, and we have to save them time so that they want to come back and have the same experience. The way we're really doing that is focusing on categories of transactions that consumers do often. And so we've done a lot of programs around transit around the world, but also food and beverage, fuel, categories that people participate in frequently. We think that's the key fulcrum upon which we can change consumer behavior, because if you save somebody a few seconds, but then it's next time they need that experience, it's a year later, they're not going to remember it. So it's something that consumers, if we're able to associate MasterPass to things that consumers do frequently, we think that's really the opportunity to help to start changing their behavior.
Credibility, trust, market position. This is something which none of those fintech companies have, because they cannot have this because they are new. You think that the future of the common market of financial services is rather synergy. The fintechs and more traditional systems like MasterCard, although I don't think that MasterCard is very traditional, like old banking, but rather synergy than crash, and the competition that will lead to winning of one side.
Yeah, so look, I think the one of the things I presented here was this idea of a digital stack, and the idea that there's infrastructure layers, there's kind of a wallet layer, and then there's user interfaces. And I think that different companies have to find a place in the stack where they can be successful. And so as a company, we've always been very strong in the infrastructure level, and we continue to be there. We have this program called MDES, which has got more than almost 1,000 banks worldwide connected to it to help digitize their cards. The next level up is the wallet level, where we offer MasterPass to our banks, but we also participate in Apple Pay, Android Pay, Samsung Pay, so that those consumers who want that digital brand and they affiliate to it, then we want to be there. And then I think the zone where fintechs can have a lot of value is in the next level up, which is in the consumer experiences. And they can use our infrastructure, the infrastructure we've built, to deliver those great customer experiences. Then it becomes a win-win. And we love some of the innovative work that the fintechs are doing to create better experiences, to reimagine what it is to do banking, to reimagine commerce. We've invested in some of those companies through a program we have called StartPath. We've also directly invested in specific use cases like pay at table to, again, show and demonstrate what these new experiences can look like. So I think there's enough opportunity that this can be a win-win. As long as everybody keeps focused on great customer experiences, and also you have to remember, if you're in the financial business and the transaction business, that you have to find a path to scale. Because we're not taking the 98 cents, we're taking less than a penny. So you have to figure out how you get scale in order to build a viable business. And so that's why it's critical to understand where you add value that somebody else can't add, and really focus in on that. And if to the extent that you can use infrastructure that's there, that gives you reach, I think that's really a power play for fintechs. It's very hard. I mean, I think if you look at technology over the years, as I said in my presentation here, technology used to be relied on one or two companies to build the whole stack, right? IBM in mainframes, digital in mini computers. And then the personal computing revolution turned that on its side, and we became into layers. And I think that's the same thing that's happening in payment, where we built magstripe, we built chip technology. But now as we look at digital, it's more about the layers, and everybody has to figure out which layer they're in, and also as a result, how they add value. But the people in the layers beneath them become partners, and then obviously it's all about serving the consumers and delivering a great customer experience to them.
At the end, we meet in Wrocław on Impact, beautiful city. I must admit, although I'm from Warsaw, I must admit Wrocław is a great place.
Very beautiful city.
But in Poland, we are very open for new technologies, for MasterPass, for mobile payments, probably for many new fintechs, although that the view of the country might be different outside. Inside you may see interesting society structure. Why? Do you think why we are so open for those new payment technologies?
Yeah, so I can tell you within MasterCard, the Polish organization is very well known as being the most aggressive around new technology. They were most aggressive around contactless, and that they've seen the results. I think more than 60% of our transactions here in Poland are already contactless. They've been aggressive around MasterPass. Look, I was actually last in Poland all the way back in 1990. So I saw Poland when it was first opening up after the big shift from communism. And I think that's a huge factor in the whole of the Eastern European and Central Eastern European countries, which is they are looking forward into the future. It was clear back in 1990, and it's been clear that they are leaning into the future, and the past is something it's in the past, and they're quite happy that it's in the past. And they're very keen to build the future and fully participate in the world economy. And there's a strong recognition, of course, that the world economy is driven by technology now. So I think that's why it's just James, my limited perspective is that there's a history that says we want the past to stay where it is, and we want the future to be even better, and a recognition that comes through investing in technology and also participating aggressively and enthusiastically in the broader society of Europe and the world. And we see that time and time again from the Central European markets, that they're always taking everything we come up with and then taking it to the next level. So it's great to be here. It was great to be here, come back after 26 years or 27 years and see all the progress that Poland's made. I knew it was happening, but it was great to see it with my own eyes, and I'm sure the next 10 years are going to be even better.
Sir, thank you very much for being in Poland.
My pleasure. Nice to be here. Thank you.